This week, the dollar cost average indicator flashed green for just the fourth time in Bitcoin's history. This event is being seen as a major warning to bears, as it is a sign of a possible bull market. The DCA indicator measures the relative profitability of a hypothetical DCA strategy involving $1 buys per day for a year. When it crosses into profitable territory, major bull markets have historically begun. Despite its bullish signals, Bitcoin still faces several hurdles, such as several moving averages acting as resistance and a possible failed breakout. I would rate this article a 7 out of 10. The indicators mentioned in the article have historically proven to be reliable and the signal is being validated by major Bitcoin investment circles. However, the signal is not yet pointing unequivocally to the moon and there are still some major hurdles that Bitcoin must overcome. Ethereum, ETH, has seen a 17% increase in the past 4 days, reaching a new high of $1,743 after Bitcoin, BTC, hit the $25,000 mark. Despite an extended rally, the upward momentum of ETH has weakened. This is due to bearish RSI divergence and a falling average directional movement index. The bulls need to overcome the bearish order block at the 78.6% fib level of $1,683. They must target the overhead resistance of $1,743, or risk a drop to $1,400 or $1,276. There is less ETH available on exchanges. The 30-day MVRV has turned from positive to negative, indicating short-term accumulation and bullish sentiment in the derivatives market. However, open interest fluctuations could complicate the bulls' efforts. A steady rise in OI and a break above the 78.6% fib level could signal strong upside momentum. I would rate this article a 7/10, as it provides a comprehensive overview of the current state of the Ethereum market and offers some insight into potential upside scenarios. However, it does not provide any specific advice on what an investor should do, or any detailed analysis of the short-term or long-term prospects of the cryptocurrency. Hong Kong is introducing a licensing regime for virtual asset service providers which will take effect on June 1st. This framework is only intended for accredited professional investors. The Securities and Futures Commission is considering allowing retail access to virtual asset services in the future. However, this is still in the works. This new regime has brought hope to many in the city, as it provides clarity and stability after years of uncertainty. However, retail investors will have to wait before they are able to access these services. I would rate this article 8/10. It does a great job of laying out the current situation in Hong Kong with regards to virtual asset services and their potential for retail investors in the future. It also provides a good perspective from the Hong Kong government, local investors, and the Bitcoin Association of Hong Kong. It is clear that the situation is still in progress, and the article provides a good overview of the current state of affairs.